Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate mumbo jumbo so you don't have to. And today we are diving into Cencora Incorporated's latest filing. This one has some interesting changes in how they slice up their business. Alright, so what we have here is a current report filed by Cencora Incorporated on the 5th of November 2025. Now this report primarily discusses some changes to their business structure and how they will be reporting their earnings going forward. They are also releasing their earnings for the fiscal quarter and year ended the 30th of September 2025. So the big news on the 5th of November 2025 is that Cencora, they dropped a press release about their earnings for the last quarter and the whole year. Now usually this is where we dig into a bunch of numbers, but the main story here is actually about how they are reorganizing things. Cencora has been doing a strategic review, basically looking closely at their business to make sure it aligns with their growth plans. And because of this review, they are changing how they report things internally and thus externally. Starting in the first quarter of fiscal 2026, they will be reporting under three main segments: US Healthcare Solutions, International Healthcare Solutions, and something they call Other. US Healthcare Solutions will include their US human health part, but they are taking out some legacy consulting services. International Healthcare Solutions will combine Alliance Healthcare, Innomar, World Courier, and some parts of Pharmalix. Now, the other category is interesting because it is not considered a reportable segment. This means it is for businesses where they are exploring strategic alternatives. This other segment includes MWI Animal Health, Propharma, those US consulting services we just mentioned, and the remaining parts of Pharmalix. They are also giving us a sneak peek at what these new segments would have looked like for the past couple of years. For fiscal 2025 and 2024. This is to help investors understand these upcoming changes as they analyze the new structure. Now, besides the structural changes, there is also the event of a conference call and webcast happening on the 5th of November 2025 at 8:30 a.m. Eastern Time. This is where they are going to discuss their earnings for the fiscal quarter and year ended the 30th of September 2025 and other related topics. You can find a link to this call and the slides they prepared on their investor website. This filing points us to Exhibit 99.1, which is the actual news release about their earnings. While the report itself doesn't dump all the numbers, this exhibit is where you'd find them. And in this release, they included supplemental disclosure, Exhibit 99.2, showing revised segment information under the new reporting structure for fiscal 2025 and 2024. This is a voluntary move to help everyone track the performance under the new way of looking at the business. Now, jumping back to the general company information, Cencora Incorporated is a Delaware incorporated company with its principal executive offices at 1 West 1st Avenue NU in Conshohocken, Pennsylvania. Their main phone number is 610-727-700. They are listed on the New York Stock Exchange. With their common stock trading under the symbol CORE, they also have two senior notes listed 2.875% senior notes due 2028, trading as CORE 28, and 3.625% senior notes due 2032, trading as CORE 32, also on the New York Stock Exchange. Let's focus a bit more on that results of operations and financial condition section. Even without the full financial tables directly in this 8K, the underlying press release and supplemental disclosure are key here. When companies change their reporting structure, it's often to better reflect how they manage the business and to highlight key growth drivers. For Cencora, splitting into US Healthcare Solutions and International Healthcare Solutions makes strategic sense, especially with the global nature of healthcare distribution and services. The other category, where they're exploring strategic alternatives, suggests they might be looking to divest certain assets that are no longer core to their long-term vision. This can be a positive sign if it allows them to focus resources on higher growth areas, but it also introduces uncertainty around those specific businesses. Now, if we were to hypothetically look at that Exhibit 99.2, the unaudited revised reportable segment information, we'd be interested in a few things. First, how have these segments performed individually in the past? For instance, what was the revenue or operating income for what will become US Healthcare Solutions in the last fiscal year? Comparing that to the projected performance of International Healthcare Solutions would give us a snapshot of where the company sees its most significant contributions. We'd also observe whether the other segment has been a drag on overall profitability or a steady contributor. Without direct numbers here, we are relying on the company's narrative. However, the very fact they are providing this historical recast indicates they want investors to see the underlying performance of these components as they are about to be reaggregated. This is good practice as it allows for a more apples to apples comparison going forward and reduces the surprise factor for investors. Finally, tucked away at the end is Exhibit 104, the cover page interactive data file. This is essentially the report in a machine-readable format, which is crucial for regulatory filings and for financial data analysis, while usually not something an investor directly reads. It is the backbone of how financial data is processed and analyzed by institutions and software. Now, let's zoom out and talk about what this all means. Cencora, a major player in healthcare distribution and services, is clearly in a phase of strategic refinement. The restructuring signals a move towards sharper focus, potentially shedding less profitable or non-core assets and concentrating on what they believe are their strongest growth engines. This is a classic move for a mature company looking to reignite growth. The creation of distinct us and international healthcare solutions segments suggests they see different dynamics, opportunities, and possibly competitive landscapes in these two major markets. The other category, especially with the mention of exploring strategic alternatives, is a clear indicator of potential divestitures or sales. This can be a double-edged sword. On one hand, it can free up capital, reduce complexity, and allow management to concentrate on core operations. On the other hand, it can signal underperformance in those divested areas and create short-term disruption. What are the risks here? Well, the execution of this new reporting structure could be bumpy. Investors might struggle initially to grasp the new segments, and the financial performance reported under the old structure might not directly translate to the new one in a predictable way. Also, the success of divesting assets in the other category hinges on finding willing buyers at reasonable prices, which isn't always guaranteed opportunities. If Cencora successfully reallocates resources from these divested businesses to their core US and international healthcare solutions, and if those segments are indeed strong growth drivers, this restructuring could lead to improved profitability and shareholder value. The clear separation of us and international operations might also allow for more tailored strategies to capture regional market opportunities. In conclusion, Cencora's move to a new reporting structure is a signal of proactive management aiming for greater efficiency and focused growth. It's a story of a company adjusting its sails to catch the prevailing winds in the complex global healthcare market. We'll need to watch how these new segments perform in the coming quarters to truly gauge the success of this strategic pivot. Alright, that is our breakdown of Cencora's latest filing. What is your take on these structural changes and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.